Well, that decline coming through, taking the index to 97.4 points, as I say. What's your reading of that headline number?
The headline number hasn't decreased substantially from the previous month. It's 0.1 points, but the key concern here is it should be heading in the other direction. And what we found in November, when one has an opportunity now to review the performance in the course of the year, is even though the December data is still lacking from the data set right now, we are seeing performance across 2011 that is very similar to performance that we saw in 2010, which of course as a crisis year is not ideal. One wants to move as far away from the 2010 performance as we can. To provide an example, in 2006 the BCI read on average for the year at 119, and we're substantially away from that, and that's the sort of number you want to test when you're an economy in recovery. So we expect that recovery is not on the horizon for the coming months. At best, one would have to move any prospect of signs of recovery to late in 2012.
This has got to be not that surprising, though, with all that's going on in the EU and the kind of impact it's having on sentiment locally. Because if you're looking at the negatives that have filtered through, on a month-on-month basis in this index, you're looking at, your inflationary figures and your exchange rate really coming to bear.
That's correct. If one looks at the BCI this time round, inflation had an impact, but of course we measure inflation against a long-term trend. So although it was a poor performer, it wasn't as poor as one expected against the long-term trend. The financial sector as a whole, or the financial component of the BCI rather, did perform better than it did in the previous month. In the previous month, the majority of readings from the financial component of the BCI were neutral. However, we also expect that this positive performance is going to be short-lived. December is expected to reveal fairly negative performance on the financial components of the BCI.
What are the factors that will come to bear as we move into that December period?
It would primarily be the unfolding of events in Europe and the consideration that some of the European countries may face a downgrade as part of the review that Standard & Poor's is conducting. They've been cautioned against this, or about this rather, and it's also not just your smaller or weaker economies that are subject to review. It's economies like Germany and France as well, and that's going to have a substantial impact on not just our trade with those economies, but also the perception of our vulnerabilities in relation to those economies. That would cause the financial readings to turn negative.
What does that spell for the kind of two-speed economy that we're currently facing right now, where we're seeing things a lot more consumer-driven as opposed to production-driven?
Well, the consumer has been slow to come to the party, and consumer confidence has also not performed well. However, we do expect an uptick over the festive season. It hasn't shown itself yet. When we looked at our trade survey in October, there wasn't much of an indication of a very happy Christmas from a business point of view. So we're hoping that November brings better tidings from the trade perspective. The business confidence index has also not been very supportive of a festive Christmas, again from an economic point of view, but we hope that this outlook changes in the coming weeks. Unfortunately, even if it does so, it's unlikely to be sustained into the new year. So we have to work more actively to create better economic times. We cannot stand by and expect to be a passive recipient of good tidings. It's the economic change or turnabout isn't going to come around on its own, unfortunately.
To what extent could we possibly be underestimating the consumer in South Africa? Because certainly last time round we saw those retail numbers coming in much higher than was anticipated at 8.3%, and we're waiting within the next half an hour to get today's retail sales numbers as well.
The reason why we're being cautious about the consumer's role in the economy is because as of October, we haven't seen the consumer come to the party yet, definitely not in our indices. Last year, we did see the beginnings of a consumer role in the business relationship with them start around that time. And this year, it's been slow to show itself. But one would imagine that the consumer is being cautious given what he's reading about across the globe, and one would hope that he could still come to the party in a fairly dramatic way and perhaps change that gloomy outlook that we're seeing right now.
Yeah. Let's take a look at the manufacturing sector, because that also a negative that's come through in terms of business climate indicators. We're anticipating manufacturing data tomorrow as well, and it should be in focus simply because of the kind of employment prospects it offers. The South African, the average South African, and also would have an effect on consumer potential from here on out.
Of the 13 subcomponents of the BCI, manufacturing is definitely the one that we watch most closely. And unfortunately, as you pointed out, this time round we're seeing negative readings on both a month-on-month as well as a year-on-year basis. So that is concerning. We do expect a turnaround in the entire real economy section of the BCI in the coming months, and hopefully that would drive manufacturing into positive territory, even though that may be short-lived.
Yeah.
But that's the only positive outlook we can offer for manufacturing at this stage. Conservatively speaking, one would hope that manufacturing starts to realize some of the benefits and programs that government is aggressively putting in place to support its growth right now. But those programs typically take a while to realize, and one would expect that they would only show benefit late in 2012.
Well, talking about government intervention, I mean, let's move from the most looked at component of the index to probably the least looked at, and that utility services, because we're still negative there. But on Monday we had Cabinet saying that Treasury would intervene in certain provinces in South Africa to get a better handle on the kind of management we're seeing on that front.
Correct. Section 100 of the Constitution allows national government to intervene where there are problems at provincial or local level, and that's certainly what we're seeing now in the Free State, in Gauteng and in Limpopo. The utility services component of the BCI has long been sending warning signs that we're not doing well on that front, that we do not have a conducive or supportive business environment at the local level. That's what this item measures. It looks at issues such as credit extended to local authorities. It looks at the volumes of electricity delivered. It looks at the pricing of electricity and other municipal services. And when we aggregate all those components, we develop this utility services measure. And it's a new measure in the BCI, and that's why it's not been very popular. Yeah. But since we've introduced it this year, it's always been negative, sadly.